The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Friday, everyone. Welcome to another edition of Breakout Investing on TFNN. Wrapping up another solid week for the market here. Great start to 2013 for a lot of different portfolios out there. I'm sure a lot of you are enjoying a nice shade of green in your stock portfolios. Been a great start to the year for the Ultimate Growth Stocks model portfolio. That's my newsletter over at TFNN. The number to use to talk to me is 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. Show is available as a podcast on iTunes. If you miss a show, you can head over there, pick up a copy. Feel free to leave a review if you'd like. And don't forget, you can listen to all TFNN programming on your smartphone. Very simple, very easy. Open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. Don't forget about Tiger TV. Great feature at TFNN.com with Tiger TV. Not only do you get the show audio, but you can look at charts live right along with me. It is carried live on Channel 1. It is archived on Channel 13. You can also watch Tiger TV on your cell phone, Android device, iPhone, whatever you have. Just open your smartphone browser, type in TFNN.com. Over on the top right-hand side of the home page, you'll see a box with 3 cell phones in it. Just click that box. It'll recognize what type of device you have and start streaming. Don't forget about the Great Panther Silver Super Silver giveaway. That's starting at next week, Monday, January 28th through February 1st. Every hour during live TFNN programming from 9 a.m. Eastern to 6 p.m. Pacific, you can win a free piece of silver from Great Panther Silver, beautiful silver coin, and you can register for your chance to win right on the homepage of TFNN.com. All right, let's take a look at the major averages here. Another decent day for the market. Not much volume in the market today. We're tracking about 10% lighter on the NASDAQ right now. Pretty good volume on the NASDAQ yesterday. A lot of that had to do with Apple, but NASDAQ volume on Thursday above average, just over 2 billion shares. Again, tracking about 10% lighter than that today. On the New York Stock Exchange, we're also tracking about 10% lighter volume yesterday on the NYSE. About 676 million shares. But checking in on the Dow here, what is this? 6 straight up days for the Dow. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 11 up days out of 12. Is the Dow looking a little bit extended here? Probably. I will give you that. We're looking at a chart of the Dow with the 10-day simple moving average, the 20-day, and the 50-day. So these are logical support levels for the Dow. Wouldn't be surprised to see a little bit of a pullback here, but we're still long. We're still long and strong in the Ultimate Growth Stocks model portfolio. Not really seeing any sell signals in this market. We're going to talk about bond yields in just a little bit, but the Dow right now up a little more than 44 points to 13,869, 13,647. That's the 10-day. 13,471 is the 20-day. Take a look at the S&P 500, see where that is. We'll look at the S&P 500 also with the 10-day, 20-day, and 50-day, and you can see just logical support levels here. S&P 500 working on, what is this now, 8 straight up days. Also looking a little bit extended here, up 6.5 points to 1501, trading above that psychological 1500 level. And finally, the NASDAQ Composite, also with the moving averages plotted here. NASDAQ Composite up 20 points now to 3150. All right. Wanted to take a look at some weekly charts here. We'll start with the NASDAQ Composite. The weekly charts give you a good perspective here. And when you look at the NASDAQ Composite, you can see this index has not yet technically broken out. It's still underneath its September highs here. So let me tell you something, folks. If money keeps coming out of the bond market and that yield on the 10-year note, it's pushing up against 2% again. And if that yield on that 10-year note gets above 2% and stays above 2%, that could just be enough to, funnel more money out of that bond market into stocks. So we'll see how it plays out. But the S&P 500 has not yet broken out yet. Certainly, Apple has been, sort of a weight on the tech sector, but overall, market breadth among tech stocks looks very, very strong out here. S&P 500, look at a weekly chart for the S&P, and we'll see this index has already broken out here. Now, you can see the 10-week moving average here at 1441. Right now, S&P 500 at 1501. This index could come down 40 or 50 points, no problem at all, and its uptrend would not be broken. Okay, so when we do get a market pullback, hopefully, ideally, it's a low volume pullback. Doesn't mean that we can't come in, 3, 2, 3, 4%, but you don't want to see waves of institutional selling. You don't want to see breakdowns in a lot of these market-leading stocks that have been leading the market higher for several weeks now. So overall, market technicals look pretty good here. Economic data earlier today, we had just one data point: new home sales down 7.3% from November to 369,000. The estimate was for a slight increase to 387,000. November data were revised higher to 398,000 from 377,000. Let's see how the ITB is faring in light of this economic data. Still just, shrugs it off. No big deal here. The ITB working on 6 straight up days here. A little bit extended here after a recent breakout over 2150. The iShares Dow Jones U.S. Home Construction Index Fund trading at 2353, up another 1.25%. Very, very busy week of economic data. Next week we're going to have we'll have the Case Shiller 20-City Index, latest look at home prices on Tuesday. The first reading to fourth quarter gross domestic product. Remember, in the third quarter, the economy clocked growth of 3.1%, 1.3% in the second quarter, and 2% in the first quarter. We're also going to get an decision on interest rates by the Fed on Wednesday. Friday, the big one, non-farm payrolls for January. In December, the economy created 155,000 jobs. Unemployment rate, I believe, at 7.8%. And a key piece of manufacturing data also due Friday, the ISM manufacturing survey. In December, it came in showed an expansion reading over 50 after 2 months of contraction. So, all right, mentioned bond yields. Don't look now, but yields are looking like they're ready to break out again here. The yield on the 10-year note up big today, 1.95%. The 30-year bond at 3.13%. Gold for February delivery fell $13.30 today, settles at $1,656.60 an ounce for the week. Not a good week for gold. It lost 1.8%. We'll see that reflected in the GLD here. Spider Gold Trust. See resistance at the 50-day moving average here. It breaks below the 200-day moving average. Been talking about the fact that the GLD looking very suspect technically here, and that is playing out. So GLD still with weak technicals here. Coming up, folks, at the bottom of the hour, just after 3:30 Eastern, I'm going to be joined by my good friend Keir McDonough from Brigos Capital Management in Boston. It is a long-short equity fund. Keir was featured in one of Investors Business Daily's new books written by Amy Smith called How to Make Money in Stocks Success Stories, subtitled New and Advanced Investors Share Their Winning Secrets. So Keir's going to talk about the book, and he's also going to give us our take on the markets. That's coming up at just after 3:30 Eastern. But before that, wanted to take a look at some big breakouts today. I'll tell you, I mean, the market is not looking bad at all here, folks. Didn't mention the U.S. dollar index. That is lower today, not by much, trading at 79.74. And March crude oil down 7 cents to 95.88 a barrel for the week. Not much movement in crude. It lost 0.2% for the week. Wanted to take a look at a weekly chart for Direxion. Actually, let's look at the daily first. TEX, see a beautiful breakout for Direxion Corporation today. The stock is up 11.6% to 31.73. We'll look at its weekly chart here, and what you have here is a breakout from what looks to be a 3 weeks tight pattern. Now, 3 weeks tight patterns are not the ideal time to establish a new position in a stock. That's what you want to remember here. The time to buy Direxion was when it broke out over 26, when the market started to move here. If you bought right around 26 and you wanted to add to the position, you have a good opportunity to add a smaller amount today because of the breakout from the 3 weeks tight pattern. Direxion competes with John Deere, Caterpillar, heavy equipment maker, but a bullish move for Direxion today. And also wanted to take a look at KLA-Tencor, just a monster move for this stock today, up 8.2% to 56.22 on better than expected earnings. Wanted to take a look at a weekly chart. Thing about KLA-Tencor is, when I look at stocks for the Ultimate Growth Stocks model portfolio, I need to see growth. I don't like to see an erratic record of earnings growth. And with KLA-Tencor, it's not the most consistent track record of growth. And when you look at the results that they just reported for the fourth quarter, even though technicals are extremely bullish here, their earnings were down 13% from a year ago to 63 cents a share. And sales were up 5% to $673 million. So those numbers were better than expected. They're expected to, in 2013, they're expected to do $3.13 a share. That's down 32% from $4.64. So, just questionable enough fundamentals here. There's no doubt that this stock is under serious accumulation today, and the weekly chart shows a very bullish breakout from a base here. And this is exactly the type of breakout you want to see in the early stages of a market uptrend. So, solid results from KLAC, but I took a pass because of kind of suspicious fundamentals at this point. And as we head into break here, I did want to take a look at Equinix. A reminder not to chase stocks. You know what? We'll come back to Equinix in just a little bit, because I'm going to put a weekly chart here, and we'll talk about that when we come back. Breakout Investing on TFNN. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Not this segment, but the next segment, going to be joined in Boston by Keira McDonough from Brigos Capital Management, good friend of mine, fellow growth stock enthusiast. So stay tuned for that. Before we went into break, mentioned some beautiful breakout by KLA 10 core. Technically very strong, fundamentals so-so. I did not partake in that breakout today, but just wanted to take a moment to remind you all out there that even though the market is looking very strong here, leadership is broad. A lot of different stocks working out there, a lot of technical breakouts, money being put to work. Be careful of chasing, because there at this point are a lot of extended stocks out there. Equinix, a good example here. Equinix has been hitting new highs in light volume. It's been wedging higher. Pretty good support in its chart down at 204.50. It's trading right now at 225.69. So this is a stock that is not buyable right now, especially what looks to be 8 straight weekly price gains at the end of this week. Equinix initially started moving on volume, but during the last 3-4 weeks has just been wedging higher in light volume. So learning how to extend it, learning how to identify when a stock is extended, very good tool to have as an individual investor. So when you see charts like this, you want to avoid them. Just wait for wait for a pullback. Another stock, I had a question today about Chihu 360, stock that we've been talking on and off about the show here. Again, this is a weekly chart for Chihu. This is ticker QIHU on... looks like it trades on the New York Stock Exchange. Always thought this was a NASDAQ-listed company, but another stock here at $32. $32, you don't want to chase it up here. When we get a market pullback, it probably looks like 28 is going to be a good support level here, but you don't want to buy before it consolidates. It may not pull back that far, but at the very least, it may start to move sideways, base, consolidate gains, take a breather, and after a stock forms a base, that is when you can nibble at a small position. Green Mountain Coffee Roasters. This is a stock that was left for dead not that long ago. Nice breakout for the stock yesterday, following through today, up another 5.5% to 46.19. Starting to look a little bit extended here, but if you remember, Green Mountain corrected 85% off its high not that long ago. I mean, this thing got obliterated due to increased competition, single cup servers, K-cups, but it really is amazing to see this stock come back the way it has. Earnings are due February 6th. Obviously, a lot of optimism about earnings, but broke out yesterday over 43.79. Right now, trading at 46.19, so it's borderline extended, but very impressive to see Green Mountain Coffee perform here. And mentioned Netflix yesterday. Its earnings report surprised a lot of people. Big gap up. A lot of people probably afraid to buy Netflix when it gapped up yesterday, but look at it today, up another 14.3% to 167.84. So just a very impressive follow through today for Netflix. Wanted to also take a look at RMD. This is ResMed. They sell devices that used to treat sleep apnea, sleep obstruction, breathing obstruction during sleep. Nice gap up for ResMed today, up 5.6% to 48.03. Earnings up 23% to 59 cents a share, 7 cents above the consensus estimate. Sales up 13% to 376.5 million. Again, a little bit extended here. The breakout for ResMed was again back earlier in the month when everything started to move. Broke out over 43. Now it's at 48. Don't want to chase this one either. So it is getting more and more difficult finding actionable buy opportunities. If you look hard enough, they're out there. We did add 2 more names to the Ultimate Growth Stocks model portfolio today, but we're pretty loaded up here, so we're at a point now we're probably not going to be looking to add anything new in the near term, and just pay attention to what we own, but don't want to get too top heavy in the portfolio. But looked at a couple of names today that were looking pretty good, so we added 2 more names. We're long 9 or 10 stocks right now in the portfolio. No short positions, all long at this point, and so we'll see how that goes. We did have some high-profile earnings reports also to take a look at here. Microsoft. Take a look at Microsoft, see how that is doing. Having a so-so day, kind of a lagging price performer here, up 23 cents, 0.8% to 27.86. So kind of so-so earnings, lukewarm, muted reaction to the report, judging by how it's trading right now. Keir McDonough coming up next. Great interview in store. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direxion Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direxion Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Quick check on the markets here before we bring my good friend Keir McDonough on from Breakout Capital in Boston. Right now, the Dow up 54.5 points, 0.4%, 13,880. S&P 500 slightly above that 1,500 level, close to 1,502, up a little more than 7 points, 0.5%, and the Nasdaq Composite up 21 points, 0.7% to 3151. Okay, joined right now by Keir McDonough, portfolio manager, Breakout Capital Management in Boston, long-short equity fund. I used to do seminars with Keir when I worked during Investors Business Daily. Keir is rock solid when it comes to the market, growth stocks, all that good stuff. I'm sure he's a little disappointed with the Patriots' performance in the AFC Championship, so we'll start by talking about that. Keir, good afternoon. How you doing, buddy?
Oh, great, Ken. How are you?
All right. So, what's the deal? I mean, are we recovered from this Patriots loss, or what?
A little time will help. It was a tough loss. I think they got beaten by a better team that day.
You know, and Tom Brady he really did look flat during that game. He didn't seem to have
his best effort.
Yeah, his passes seemed to be a little off. They were a little behind people. Didn't have the pop. You know, did you know that Tom Brady is building? He's got a big mansion almost done out here in Los Angeles. Have you heard about that?
Is it 30,000 square feet?
Yeah, it's 22,000 square feet, and there was an article in USA Today, I think it was yesterday or maybe even today. He's getting a lot of flack about the fact that his mansion has a moat, believe it or not, for some sort of protection. I don't know what the article in USA Today said. I guess he needs some medieval fortification at his house.
Put some alligators in there too.
Yeah, that's right. So, Kier, let's talk about the broad market. You know, we talk off and on. We both are growth investors out there. What's your general take on things? Is now the time for investors to be on fully 100% on offense here? Is it time to take a look at what you have and maybe scale back? What are your general thoughts?
Well, looking on the bigger picture, obviously the market coming just the month of January has been out to a very strong start. I think what we're seeing is a big rotation is going on. People are taking money off of the sidelines, out of cash, out of fixed income. I mean, right now, the 10-year Treasury, when I was looking earlier this week, it was 1.85. As I look at it right now, it's 1.95. That's in about 4 days. That means bonds are selling off a little bit in the short term. My guess is if this rotation continues, it's going to find a home in assets that should have benefits from inflation, and equities and growth stocks obviously are beneficiaries of that.
So what do you say to people? You know, we sort of had a modest. You and I were talking about this. We had a modest follow-through day right after Thanksgiving, and then really the big bullish day for the market was January 2nd, where the Nasdaq gapped up, and that really was additional follow-through. But there are a lot of people out there that are not yet in this market, and they're distrusting of it. I mean, do they still have time here? I mean, when you look at a daily chart of the Dow, the S&P, maybe not so much the Nasdaq Composite, but at least with the Dow and S&P 500, NYSE Composite, Russell 2000, I mean, they've run a lot over a short period of time.
They have. There's no question there. Well, you mentioned something interesting. On the last day of the year, December 31st, and on January 1st, we had a very unusual thing happen. We had back-to-back days of advancing volume over declining volume that was over 90%. It was 96 one day, 92. So that's back-to-back. Historically, it's only happened 6 times over the last 50 years. This might answer your question. On average, the market was up 6% a month later, 13% 3 months later, and 6 months later was up 19%.
I had not heard that statistic before. Very, very interesting. Very interesting.
I've heard people call it a blast-off indicator. Very rare. There's no guarantee the market's going up from here. But I think the point I'm trying to make is when you have a powerful back-to-back day, 2 days like that we saw, it's a sign that institutions are certainly putting a lot of money to work on the buy side.
Gotcha. Kier, you were recently profiled in a book that was just put out by Investors Business Daily called How to Make Money in Stocks, Success Stories, written by Amy Smith. The book is subtitled New and Advanced Investors Share Their Winning Secrets. And I would definitely put you in the category of an advanced investor. But, well, first of all, congratulations for being profiled in that book. I wanted to ask you, I read the book. There are three stocks that they talked about. There was in 1995. There was Centennial Technology, big winner for you. Crocs, the footwear maker, was a big winner for you, and also First Solar. Out of those three stocks, does one stand out more than another in terms of, man, I really nailed it?
I think the first time you really do it, and it was in 1996, the first time I had really handled a company correctly. I think it was Centennial Technologies. They actually were based here in Massachusetts. They were a PC card company, and I was able to buy it at the right time, add to it at the right time, and sell it. Went on one of those parabolic climax type runs, and I was able to lock in some great games, not only myself but my investors, and that kind of proved to me that the system really works.
Yeah, well, no doubt about it. I think anybody that uses all of, or at least parts of IBD's system, using fundamental and technical analysis, identifying fundamentally and technically healthy growth stocks in their early stages of a move, all you need is that one big winner to show you that these really are the types of stocks to focus on. Folks, if you want to check out this book, How to Make Money in Stock Success Stories, you can read about Keir's success with picking growth stocks. Imagine you could pick it up at Amazon.com,
sure.
any online bookstore. But it's a great read, and just plain old normal people, and then fund managers like Keir share their stories of how they go about picking growth stocks. Okay, so Centennial Technologies, Crocs, First Solar, a lot of these growth stocks have certain characteristics. We know that they're big earnings and sales growth. They're just starting to get discovered by institutional investors. There have got to be some names on your radar right now that you're expecting big things from in 2013. Any stick out?
Yeah, right off the bat, I think Facebook is one that I think has a lot of potential behind it. I think it was probably one of the worst IPOs ever done, became one of the we'll call it the most despised company there for a while, but they also have 1 billion, with a B, that's 1 billion users, and it's the most visited website in the world. Here's the real key on this, though, Ken. Mobile advertising. Their growth in mobile advertising, right now, 55% of their usage is coming from mobile. People on their handsets, on their iPads, and that's really been accelerating over the last few months. And these guys are the 800-pound gorilla in this space.
Well, no doubt about it. And this graph search product that they released earlier this month, the market's reception was a little bit tepid, but I think people are starting to realize that this, really could be something that generates meaningful ad revenue as well. I agree.
I think it's kind of their secret sauce. Think about it. All the people who've disclosed their interests, all the pictures that are on there, and they've put them on there willingly, and it's on there in volume. And this allows Facebook to target market with exceptional accuracy, I think.
Yeah. What about the financials? You, in your notes, you mentioned an interesting financial. When people look at the financial stocks, there's the XLF, an ETF that has been kind of slowly, steadily moving higher. But you've had some great breakouts recently from the likes of Goldman and J.P. Morgan. What name are you looking at in the financial space?
Names have worked well. One that I think looks great is BlackRock. And again, I'll back up. These are what I would call bull market stocks, brokerage stocks, banks, assets. When the stock market does well, these companies benefit from higher prices. Now, BlackRock manages $3.8 trillion. That's with a T, $1 trillion. They own the iShares brand, the ETFs, which has been a great product for these guys. Management is excellent. Larry Fink does a great job there. They just hiked their dividend 12%. Last year, they bought back 5% of their shares. They're going to buy another 5% this year. Really well-run company.
So BlackRock, fundamentally strong, technically strong, obviously under accumulation here. Looking at a weekly chart for BlackRock in Tiger TV, the breakout was basically over 200 right. Bucks a share, give or take. So you're at 236 right now. One thing I've been talking about, Keir, on my show, when you go through growth screens at this point in the market, the number of extended stocks out there certainly have the upper hand over those that are still within buying range here. It's not necessarily a bad thing, but I think investors need to realize that a name like BlackRock, the breakout was over 200. It's at 236 right now. What do you tell people? Say, you don't want to chase it up here, right? So what's a good action plan for somebody that wants to own BlackRock at some point? If they're not going to chase it here, what do they need to do?
Sure. Well, the market's going to exhale at some point. We've been up a lot. 9 out of the last 10 days, I think, on the Dow. So we've been up a lot recently. We're going to have some moments of pullback. So you kind of wait for those times, or you wait for the stock to kind of consolidate the move it just had in BlackRock's case, from 200 to 236. It's going to pause for a while. It's going to, build a little consolidation, which might give you a better risk reward to buy the stock at that time once it's kind of settled down a little bit.
Yeah, no doubt. So instead of looking at the financials, instead of looking at the stocks that are lagging in this group, it's perfectly fine to take a look at a stock that has already shot forward. You're probably better off. You're going to get a better profit opportunity in a name like BlackRock, clearly one of the leaders in the financial sector right now. Even though it's extended, better to wait for a pullback here or a new base to form rather than target a second, third tier stock in the group. I guess that's what you're saying.
I agree completely. That's it, Kenny. Just wait for a better, higher risk or a lower risk opportunity to be able to step into the name. And the market does present those, and maybe the stock doesn't give you one, but there will, if this market's going to continue on, we're going to have other opportunities to buy stocks at better risk reward points.
Yeah, no doubt. And Amazon took Amazon a little while to get going. Had a recent breakout over 263. Man, this one's gotten impressive real fast.
It really has. Had a good day today. It's having a very good day today. But these guys just keep expanding their market share, and as far as retail, they're absolutely the big horse in online retail. The other part that a lot of folks don't know about is their AWS, which is their Amazon Web Services. And I've seen reports this could be at least as big as all their other businesses. And last year they did $50 billion in retail revenue. So there's a big potential for this company.
So web services, are you talking almost like a service like Equinix provides, like data center services?
That's really what it is. There's a lot of companies out there that want to rent data, storage spaces, and computer time. Amazon has it, and they do it at a fraction, and they're able to do it at a fraction of a cost. And the other part that's interesting is they will actually get better margins from this than they do from their retail business.
Wow. Yeah, that's pretty impressive.
Powerful.
All right. Well, anything else on the market here? I think on a scale of 1 to 10, we're talking about a lot of different stocks, a lot of different industry groups, a lot of different sectors. I think market breadth on a scale of 1 to 10, it's got to be way up there. Would you say 8, 9?
I'll leave it at this. It's a bull market.
It's a bull market, and it's not too late, because listen, I hear from people every day that say, I've been slow to put money to work, still in bonds, not trusting of this market. I mean, you call this market uptrend maybe, a month old, maybe a couple months old, something like that.
Sure.
Leaders can take a while to fully come out. Just because some leadership has already been established doesn't mean that more leadership can't come down the pike in coming days and weeks, correct?
Absolutely, and I think a good thing for people who are feeling underinvested, which isn't just the individual. I think a lot of the institutions are feeling pressure also that they don't have enough in the game. So any pullbacks you see in the market should be opportunities that you could add to names or initiate. And again, you don't put it all into the market at once. You put some money in, that begins to work. You can always add some more as you're making progress in the market.
No doubt about it. That's a common pitfall, starting too top heavy in a position. Anytime you're buying a stock for the first time, it's always kind of a nibble buy, see if it works, and if it works, then you can slowly scale into the position, keep your average cost basis in check. That's very good advice. How's the weather out there, buddy? Okay, not too cold?
It's about 10 degrees.
All right. Hey, Keir, appreciate you coming on the show. As always, How to Make Money in Stocks Success Stories. Read about how Keir has done well with growth stocks. You can pick that up at Amazon. Have a great weekend, Keir.
Thanks, Ken.
All right, take care. All right, folks, headed into the final break. We'll be right back. Ken Shreve with you, Breakout Investing.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. Major averages hanging in there pretty well as we head into the close here. Taking a look at a chart of the Dow. Right now up a little more than 48 points to 13,873. Next, we'll take a look at the S&P 500. How about that Dow? Working, looks like it's going to be 11 gains out of the past 12 sessions. S&P 500, we've got, 8 up days in a row, looks like. Right now, S&P trading at 1501, up a little more than 6 points on the session. And the NASDAQ Composite, be the final index we checked today. It is up close to 18 points to 3148. Thanks again to Keir McDonough from Brigos Capital Management. His website is Brigos, BRIGOS, capital.com, and you can follow Keir on Twitter as well at Keir McD, KIERMCD. Go way back with Keir. Have a lot of respect for what he does and appreciate his insights on the market. We'll have him back again soon. All right, checking in on some other earnings reports today. Good numbers from Starbucks. Let's check in on Starbucks here. Nice gap up for the stock, up 4.1%. Impressive move for Starbucks. Last trading at 56.79. Mostly in-line results. Earnings up 14% to 57 cents a share. Sales up 11% to $3.8 billion. Global same-store sales up 6%, a little better than expected, but nice volume in Starbucks today and a nice technical breakout as well. Remember, Cirrus, we were a little worried about Cirrus Logic. They do more than half of their revenue with Apple. They do audio chips for the iPhone and the iPad. Kind of a broken stock here, but Cirrus up 10.4% today to $29.48. Huge growth at the chip maker. Earnings up 281% to $1.64. The estimate was for $1.41. Sales up 153% to $310 million. Good news in this report was that Cirrus said that it did score a design win at what it called a Tier 1 mobile handset maker. That's the knock against Cirrus. It gets so much of its revenue from Apple. Wall Street wants to see it kind of branch out with different revenue sources. So that is probably partly what's moving the stock today. Its guidance for the current quarter a little bit slack at forecast revenue of $200 million to $220 million. Current consensus estimate at $234 million. Tempur-Pedic also having a good day. Let's check in on the very comfy mattress maker. Big gap up. Hits a high of 43.45. Now trading at 40.83. Up 6.5% on the day. So another one of these stocks that really corrected sharply from 87 down to $20 a share, but it's more than doubled from that low of 20 it hit. So interesting. I meant to ask Kira about that, but these stocks like Netflix that came in 80% off its high has rallied back smartly under meaningful accumulation here. Same with Green Mountain Coffee Roasters, down 85% off its high, has been in rally mode in spades as investors think that this company may be able to deliver meaningful earnings growth going forward. Don't forget, folks, to check out a trial to Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com. 30 days. Just click on the investment, click on the newsletter tab at the top of the page, and then investment newsletters. 30 days absolutely free at TFNN.com. Very busy week of earnings next week. More tech. We got Yahoo on Monday. On Tuesday, Amazon.com. And a lot of people are interested to hear what Facebook has to say on Wednesday. So another busy week of earnings. Coming up next, Tom O'Brien, 4 to 6 Eastern. I'll see you back here Monday. Have a great weekend, everyone. Be safe.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.